How you guys doing? Let's get started with the market and let's see what's been going on and where we can make some money. Looking at the market, we'll start with the S&P 500. So we're gonna really simplify it, and there's two things that we have to focus on: is the levels right here that we're talking about. Okay, and the levels are this: if it gets above 400, we're gonna go easily to 404, but the downtrend is still valid. To the downside, if it gets below 375, we're going to get a nice break of this trend line and we're going to go down probably to test the 368 level and go down to 350. Now, what's important to note here is that this level previously held where we can call it support now. So the support level here is very important. That means there's a buyer sitting here because price consolidated or accumulated for a zone and then it pushed up higher. Now, what's important to also know is a 400 is a big psychological level, and that's holding up really well where bears are pushing it down. So the 400 level rejection is very, very critical to keep in mind. Now, what we want to focus on is what happens in the next coming days. It could rally from here a little bit, or it could come a lot lower from here. Okay, so what we want to continue to focus on and what we want to continue to target is the fact that the bigger levels, which is the 375 or the break of the 404 level. So right now S&P is in a nice consolidation zone. There's not a lot to do. This apex is getting very tight, but however, over the coming weeks we will have a direction and we will be able to take a big trade on it. Now looking at the triple Qs, the triple Qs are very similar to the SPY, right? But however, they've been hurt more by economic downtrends and interest rate hikes than any other sector. So what we want to pay attention to the Qs is there's two main levels that we want to focus on. The bigger level is this purple zone right here. This is going to be the biggest play. If price gets above this, which is 312, it pushes higher. That's a nice reversal that we will have. But someone like us that are sitting and watching could be like, hey man, that's a lot of time away. Yeah, it is. Sometimes patience pays, right? Every market is not a day trader's market or a swing trader's market. Markets change. You have to change too if you want to continue to make money in this market. So if we look at this, nice rejection on this trend line, which is what I talked about in this previous video, and this level here, which is the 285 level, and we're pushing lower. Now, what's important to note here, this is a very vertical move, and I've talked about this in my videos multiple times. When a move gets too vertical or too downwards, whether it's upwards or downwards, we want to be cautious and we want to wait for a pullback. And then after the pullback, there should be a period of accumulation or consolidation, and then the move following that is the real move. Right now, we had a nice uptake in the triple Qs. Now we're having a pullback. We want to see this pullback pause for a little bit, and then we want to see it consolidate before it makes its next move higher. But right now we're gonna be sitting and watching what it does. So looking at IWM had a nice breakout. It went to this level, so this is multiple rejections that were happening on IWM right now. So we can see here clearly. So this level is becoming a level of interest. And in order for these levels to show up, they take time, right? So this is another area here. And now we're getting close to this liquidity zone once again. And right about here. So if IWM gets above this, clearly this is an important level. I would wait until 192, this level still, before we break out, because this level holds more dominance for me than this level. Yeah, sure, bulls are going to break through here and then test here and then come back and retest this. The retest always tells you if this is a real move or this was a fake out. So if there was a real move, then enough bulls or enough buyers will show up to push this higher. So if we look at it on a daily picture, we're still in this little phase, and this could be a head and shoulder pattern this way to the downside, and then it could break 165 and push lower. So we have to be patient, let it develop, and then go ahead and execute. Looking at the Dow Jones, so this is what I clearly said in the yesterday video. The Dow, if it breaks above 350, it'll be a really, really good break. But if it doesn't, then we're gonna wait until it does something for us. So right now it's headed lower, but this is still a positive inverted head and shoulder until we see a break of 328 and a clean break of 322, and we push down. That will invalidate this pattern. So right now we have big levels and big meaningful ways to go. And right now we can see, the price action on Dow today was very big, a push to the downside. So we want to continue to monitor this and see if this consistently follows through. Okay, so that is something that we want to continue to watch and we want to continue to monitor. Okay. The next thing that we want to focus on is VIX. Okay, I've talked about this VIX. I like to see it below here and then get below 14. And this is exactly the reason why. It just bounced off the support zone, came below it, had a fake out, now it bounced bounced off of it. We want to continue to monitor the VIX and see what it does and what's happening here, and to see if this is actually going to prevail and push higher here. Okay, that's something that we want to continue to watch over the next coming weeks. Right now, the VIX is holding above 18, but we want to continue to watch it. Okay, so if we look at gold, gold also selling off here with the market, which is quite interesting because gold is a safe haven or asset that we continue to watch. This is one of the trades that I do have on it. This is why I talk about a breakout and then there's a pullback, which is why my stop limit is around 171, and we'll see what happens with this. Right, gold is retracing a little bit. We'll see what it does, but however, we can see gold is barely impacted compared to all the relative other sectors. Right, the other thing to notice here is today the bonds actually went up as the market went down, which makes sense, and the yields went down as well. So that's something that we want to continue to watch and what happens there. The interesting thing to know, and this is what I've been consistent with and talking about over and over again, when all sectors are red or when all sectors are green, never take that move at face value. There's something behind it. So there has to be a rotation, a good move in multiple directions. So if not everything can be red, something has to be green. If everything is red, that is something cautious that we must continue to watch. So today we have what is everything is red. So we don't want to be taking aggressive trades in a market where all the sectors here are red. Okay, so hope you guys enjoyed the video. I'll see you guys tomorrow.